This is an industry that creates jobs, drives innovation, wealth and economic value.
Hello and welcome to Beyond Borders, and I'm your host, Andrew Fahey. And on this podcast, we focus on the exciting challenge of taking your business globally. And we do that in three ways. We speak to business owners who've taken on that exciting growth journey. We speak to service providers that can help us along that journey. And sometimes we just speak to exciting businesses that we can all learn from. And today we've got a very special guest to speak about a very, very difficult subject, and that is Angus Hartley from Augment Equity. Now, any business that has been through any sort of investment from private equity understands the challenges of getting that leadership and support structure correct. So today we're going to be delving into that subject. So Angus, please introduce yourself and tell us a little bit about Augment Equity.
Well, thanks for having me. So Augment Equity is a business I launched 6-7 years ago. It's a continuation, I guess, of what I've been doing now for 20 years, which is quite unbelievable, really. So what I focus on is delivering C-suite search on behalf of portfolio companies, which are backed by investors, backed by venture capital / private equity businesses, in order to help them maximize growth effectively.
And for those who don't know, before we delve into the discussion, just a little bit of an overview of what is private equity, what is this investment world we're talking about?
Yeah, so the purpose of private equity is to invest funds that are raised from institutions, pension funds, banks, high net worths and others, to basically buy control, minority or majority in businesses that, following research and diligence, they believe have the hallmarks for significant growth. So effectively, it's a bit like investing in property, I suppose, would be a similar analogy. You buy a property, you do it up, you make it bigger, you grow a family in it, you might buy next door, and you sell it for more than what you purchased it for. So typically these businesses over 5 to 7 years will bring in a new team or augment the board with individuals that they've not worked with before, who could drive those levers for growth to really maximise the exit. So the raison d'etre for these houses is to grow, maximise growth, and then sell the business either via flotation, trade sale, or possibly selling to another private equity firm who will take the business through the next life cycle.
You've taken one of my questions of where did the business name come from away there, which is great. And the bit we're going to focus on today then is building that leadership team. So the doing the house up, making sure that the building has the right foundations to drive that growth and success. Absolutely. So it's very, very important. Without investing in the people, the growth isn't going to happen. It's as simple as that. So typically my sweet spot is focused in on the SME space. So maybe private equity, answering some of the last question a bit more, it's a broad church. So you get, venture capitalist and private equity. It's kind of slightly interchangeable really, but the venture capital badge are those investors at the smaller end, startups, the smaller end of the investment cycle, through to mid-market, as they call it, in the SME space and the larger buyout space. And my bread and butter is that kind of venture capital and mid-market, so 0 to the tens of millions of EBITDA or profit. Mm-hmm. And typically, those businesses will previously have been owned by and led by an entrepreneur, a founder, a family, and they're often going through their first private equity life cycle, and they need to grow up fast. They need to professionalise. I guess typically in the past you will have had a scenario where the entrepreneur, the owner, will be calling all the shots and doing things all their way. Yep. They won't have maybe had a proper finance leader, for example. They'll do sales themselves. Maybe their wife's the operations director. But in order to kind of go from that level of business up to something more significant, maximising growth, that will only take you so far. You need to bring in the right people. You need to invest in the people, both at board level and below, to really push on and kick on. And that first step is probably the most sensitive in all the development. Moving from privately owned to investor backed, there's cultural dynamic, there's a professionalism dynamic. That must change and make your job more complicated as well in terms of augmenting the right people at the right time.
Well, every situation is different. But there's usually a step change. There's a gear change in pace and change. These 3 to 5 years isn't a very long time to get the kind of 3 to 5 times returns that private equity would like. And things need to be done differently. You need to bring in different ways of measuring growth. There's KPIs, there's metrics, working back from a plan based within those timescales that you're aiming at. And especially if you're going from a founder-led business where you've got that autocratic leadership dynamic. People are going to have to change their ways, really. Yeah, obviously, augmenting the board with people who have worked in those environments before or larger environments will also help bring in the skill sets and the mentality that's required. But you've got to be empathetic as a leader. You've got to take the existing team through that in a kind of understanding, patient way, but with the speed of change that's required.
So I've been through the founder to investor transition, and I've been involved in the investor to large trade buyer journey, lots and lots of different versions of this. And I guess the other nuance that we need to weave through this conversation is don't forget what made you famous as well.
Yes.
To have a whole host of sort of portfolio directors suddenly dropped in, there's a reason why the investment firm liked the business, because of the product, the service, the experience as well. And so getting that balance of what the business did well and sort of preparing it for scale, I guess is why you're the...
Yeah, and they don't just like the business. They've been through rigorous due diligence. Pre-deal, they've looked at the business, whether there's been a formal process or not to sell that business. They will have crawled all over that organisation. Financially, obviously, they will have, commercial DD, looking at the market. I mean, typically, your private equity professionals, they've got a background of, consultancy, corporate finance, certainly a kind of financial background themselves. And they love data, they love detail. They won't back a business unless they really believe that significant growth will be driven. And I guess it's a hard decision to make when you've got quite an immature business, I suppose. And you will have seen that. You've been through 2.5 journeys, haven't you, really, in the past?
So when a private equity firm invests in a business, the leadership team are usually one of the first ports of call, the first areas of focus. Given you've been doing this for such a long time now, what are some of the common challenges that occur in this process? Yeah,
I mean, but before the private equity firm buys the business, they need to, as part of their diligence, look very, very closely at the team, find out where the gaps are, find out where the strengths are. Obviously a business to get to a point where it's going to be backed, going to be bought by private equity, it's obviously done a lot of things right. A lot of things have worked. So it's understanding what is special about the business, but also what it requires to take it to the next level. So what I see a lot is again, at this kind of SME first private equity journey, kind of end of the market, you tend to find that they lack finance rigor. So, owner-founders or family-owned businesses they very rarely hire proper CFOs or finance directors. They probably outsource it in most cases.
And there's a level of intuition that goes with those sides of the business as well, rather than a data-driven organisation.
Well, exactly. And I guess every private equity-backed business, it needs to work back from where they believe the business should get to in 3 to 5 years. And they should build metrics and KPIs based on financial data and reality, kind of working back from that to ensure that they stay on the plan and achieve those. So I'd say the finance role is the first role that gets looked at very quickly. Typically pre-deal, they'll also often recruit a non-exec chair, more often than not as well. We'll come on to that later. But I think in family-owned businesses in particular, you'll have a dynamic where you'll have other family members on the board. There'll be a chief exec. There'll be possibly other shareholders involved, which makes things slightly more complicated. And actually, the staff will often feel part of that family dynamic as well. One of the really big challenges is kind of breaking into a family-owned culture that will need to change over time, but doing it in a way that's kind of sensitive, thoughtful. Again, taking all the good bits that exist, not trying to change things too quickly. and putting in place that professionalisation that needs to happen.
Yeah, and the couple of times I've been through this process, it was done very differently. Right. So there was, one time there was quite a rigorous human capital investment strategy, and we were whisked away, and we met sort of experts in this, almost like re-interviewed, where they assessed capabilities, experience, interpersonal skills, future career aspirations. And then another time it was more of just a get to meet the new investors. And I'm sure that was still going on sort of subconsciously for people, but it was less formal. What are the tools and support mechanism that Augment Equity bring to businesses to help them with this challenge?
Yeah, so it's working as a trusted consultative partner to the investors. The earlier we can have these conversations with the investor, the better. So we can help them map out their short, medium, long-term needs from a C-suite perspective. And it's really understanding, I guess, what the aspirations are, what the business needs to meet those ambitions, short, medium, and long term, and therefore what gaps need to be filled with the right people, with the right skill sets and experiences to join the dots.
Yeah. Okay. And again, it's somebody that's done this a lot. There must be some common red flags that occur in these scenarios as well. It'd be great to share with the audience what these are.
Yeah. So yeah, there's a number. And I'd say the first thing is lack of energy. I would say if someone's lacking energy, if the chief exec, the leadership team in general are lacking that energy, they're not going to hit the ground running. They're not going to transform that business within the timescales that exist. They'll find themselves behind the plan and playing catch up very quickly if they're not careful. And that includes making those board level and senior hires, because the business won't be firing until it has those people in place. Secondly, I'd say communication. If there's a lack of communication, particularly in those scenarios where there's a change of ownership dynamic, family or entrepreneur, founder-led, etc., you need to be, from the get-go, you need to be open, honest, from the shop floor up with everybody. There needs to be a consistent clarity of plan that everybody at all levels are able to buy into and get excited about. Yeah. I mean, this is a really exciting journey. And again, the great thing about private equity in a family-owned business, there's a serious glass ceiling there for staff. Yeah. This opens up the possibilities for everybody at all levels.
And that communication's both sides, isn't it? It's the existing leadership team to potentially say, I want to get off the bus. Yes. It was great to do this and I like to work that. I don't want to do that. And for the new leadership regime to share the path of the future, to get people excited and to understand where the skills fit. And I think sometimes that dynamic's confused. It's not a new mum and dad. They're financing the leadership team to go and succeed.
Yes, and it's taking that business onto the next level and beyond. I think a lot of founder owners, entrepreneurs, family, members, they recognise when they've taken that business as far as they can. They've probably been stuck on the same EBITDA level for the last 2, 3, 4 years. They recognise that in order to kind of get beyond that and grow that organisation, that baby, it needs to be allowed to fly. And the only way that's going to happen is if they have the capital, the know-how, the knowledge required to take it through, that step change effectively. So I'd say the next red flag is where people lack that attention to detail that's required, particularly around numeracy. You need a business that is built on metrics, that's exit orientated from day one. You've got to build your way there, and you've got to be able to measure where you are on the plan and communicate that consistently on a certainly weekly, monthly basis. And I guess if you're off the plan, then you can very quickly, it's a bit of a kind of early warning system, I suppose, and you can then pivot and change accordingly. The next is unwillingness to change, I'd say, is another red flag. And again, you've gone from that owner-managed, autocratic phase of growth that's got you to where you are. In order to step up and go beyond that, you need to be innovative. Yeah. You need to be willing to pivot and change and do things differently. And I suppose one of the big things that private equity firms need to do pre-deal is assess the management team and the leadership team to make sure they've got what it takes. They've got that, I guess, commercial creativity to take the business on and upwards.
I think one of the other red flags that I've seen through my time, and especially through various M&A, is the owner's always ready for the investment. Whether they're always ready for the emotional turmoil that comes with bringing a majority stakeholder into the business, it can be very, very different. Have you seen examples of that?
I have. And I think what's really important, first of all, is that the private equity investor is very open and honest at painting the new reality, a picture of the new reality. If the founder's staying on, or if somebody's stepping up, leading an MBO who's been at the organisation a while, they need to understand that things have got to be done differently. Things have got to change. As you say, for a lot of people, it can be hard to change your ways. It's hard to let go of the baby sometimes. And I think, firstly, private equity firms need to make sure that they can change from the outset.
Yeah.
Now, they might say they can, and so you've got to jump in and see what happens. I guess ultimately, if that leader can't, and certainly if that means that the business is behind the plan, isn't going in the direction of making those changes, then at that stage you need to think very seriously about making a change and finding succession.
Yeah. So clearly every business is different, but is there an ideal template of what the perfect leadership team for a newly invested private equity backed business looks like?
Well, as you say, every business is different, but the board needs to be comprised of people who are going to basically leverage the opportunity and push the business on. So you'll obviously need a chief exec, and that individual is who the private equity firm is backing. Mm-hmm. They've got to have the skills and the gravitas and the personality, everything we've spoken about already, to take the business on and upwards. Around that individual, you've got to build a board with other individuals with verticalized skill sets and experiences that complement the CEO. The CEO can't do everything. And again, it's that step change from owner-founded to something more mature and more sophisticated. So you're going to need a finance director, CFO. You're also going to need sales and marketing, someone who's really going to push the business's growth agenda forwards. Mm-hmm. Do things differently. Again, you tend to find that your owner-managed businesses won't necessarily have a board-level sales and marketing leader, but it now requires someone with that verticalized skill set to really take ownership of that area. And then lastly, operations is another typically, and again, it depends on the sector and various things, but typically key component for a business to ensure that it remains as efficient and effective as possible, both in terms of having that delivery ability, and also kind of a maximised margin kind of scenario with the train set that they lead.
And today's business world is more complicated than ever, but there's probably two things that are driving change at a velocity that outstrip the others, and one's AI, and two's the need for businesses to think about international and global presence. Have you seen that change the dynamic of what's required in a board?
Most definitely. I mean, I'd say obviously we're living in a digital age. Technology is one of the aspects that's really sped up the ability for businesses of all sizes mm-hmm. to go global. Yeah. It's not just the larger businesses as it was 10 years ago or so. Yeah. It's startups these days. And I guess, if you're an organisation that has a service proposition or a product that other jurisdictions don't have, then why wait? Yeah. Whether it's partnership, whether it's acquisition, whether it's startup in different territories, the opportunity is there now for people to seize that opportunity in a way that never existed before.
So you mentioned earlier on investment cycles, and typically they tend to be 3 to 5 years, but they're subject to lots of other things, the economic environment, other portfolio companies, but it's the usual sort of dynamic that people talk about, which in one way feels quite a long period of time, but in another, especially when you're in that seat of having to make the change, it's an incredibly short space of time. One of the things that private equity businesses need to get a sort of handle on quickly is that pace of change. When we're trying to find the right people, how do we balance that go quicker with finding the right person is absolutely instrumental? It seems they don't sort of coincide.
No, exactly. I know what you're saying there. I mean, I'd say in the economic turmoil we're now seeing, 3 to 5 is probably more like 5 to 7.
Yeah.
You know, the timelines have been stretched a little bit in recent times. But you're right. One of my biggest bugbears is when organisations either don't make any change at all, and I guess you come out of due diligence, you've got the war scars, the battle scars of diligence, which is very, very rarely seamless. And you know, you take a breath and you step back, and then all of a sudden you're 6 months into the journey and you haven't made any change. You know, your eye's been taken off the ball, and I do see that a lot. I think that's especially the case if the business manages to kind of do well in its first couple of quarters. It's on plan. That can be something to hide behind sometimes, and therefore, you know, people, you know, don't make the changes at board level when they can and should, and that can come back to haunt you if you're not careful.
In addition to sometimes leadership teams hiding behind positive trading, there's also this new decision-making framework, there's this new governance that comes in, and sometimes there's a little bit of paralysis by analysis or fear. Do you see that happen?
Oh, definitely. And people can take too long to start making those changes at board and senior level. And I think that's partly driven by the fact that it costs money, it costs time. It's a distraction from the day job. You've got a lot of plates that you're now spinning.
And getting it wrong is a huge problem to any business, irrespective of the size.
Correct, exactly. So my other bugbear is around the fact that people make quick and dirty decisions sometimes. So they'll come on board and they'll just hire the first semi-relevant person they come across.
The opposite extreme of paralysis by analysis.
Exactly. And what they need to do is they need to think even ideally before the deal's done. And again, it goes back to my earlier point about, you know, doing your diligence on your C-suite, your management team, your senior team. Okay, what do we need? What skills do we need? What experiences to kind of bridge those gaps that exist within the senior team of the business? And you need to do the job properly. You need to engage properly with a search partner, a proper search partner. You need to get your aid memoir or your brief, your job spec right and clear, and it needs to be agreed across all stakeholders. You often find there's different perspectives with private equity, with the chair, with the chief exec, etc. And work with a proper search firm. They will bring all that together and find the very best person, as opposed to the most available person.
So we just touched on the economic climate and also sort of positive trading, but in these really tough times where trading softens, sometimes the businesses tend to sort of pause on those tough decisions. And actually, my experience, and probably this is the top tip that we can give to people, I think this is the time to innovate. It is the time to make those tough decisions, and there's no tougher decision than sometimes having the wrong person in the wrong seat or an empty seat. Do you agree with that? Do you reconcile with those points?
Absolutely agree with that. I would say that people are your biggest investment, and on that life cycle, the time frames you're working to, you've got to take advantage of time whilst you have it, effectively. And your business, any business, it won't be firing on all cylinders until you've got the right people in the right seats doing those verticalized roles that the business requires to actually take off. Now, whether it's a strong or weak economic climate shouldn't matter. It doesn't matter. And actually, in times of weak economies, it's often a very good time to recruit good people. You know, other businesses are struggling. And it's often a good time to turn heads. You know, if I'm headhunting people from competitors, for example, you know, if I present a really exciting opportunity where there's an organisation being invested into, it's going in the right direction, it's showing that it's doing all it can to
the contrast
really
is
grow
really
the business.
helpful.
Exactly. So I would say, I would say this, but it's true. But until you've invested in that team and maximised all the seats around the board table, you're not going to be firing. I think the other point to make is also the timescales it takes to recruit top people. So it's not an overnight job. You know, you might be in a bit of a, you know, kind of the kind of bottom end of an economic slump, but it might be 6-9 months before that C-suite person is actually physically in the role and doing the job. The time it takes to deliver a process the time it takes to wait for people to work through their notice periods, etc., good people tend to be in roles. You might be lucky. There might be an available star. But for me, it's all about investing in the superstars when you can, and not delaying it, because you will regret that if that's what you do.
Okay. So we've talked a little bit around what the ideal leadership team looks like and those core pillars of leadership and finance and growth and great operations. In my experience, when investors come in, especially for owner-managed businesses, it's the first time you talk about non-execs and fractional and chairman, and there's all these other types of new roles as well. Is it, it's probably worth giving people a bit of an overview of that as well?
Yeah, so in most cases, non-exec chair will be appointed, usually pre-deal actually. The non-exec chair ideally will be somebody who has relevant sector experience. They've been through the private equity journey a number of times before. They can help assess the asset alongside the commercial DD and the private equity firm looking at it, I guess in a much more qualitative way. So non-exec chairs can be really important pre-deal, never mind on the journey. So on the journey, I guess the role that your non-exec chair is doing is holding the hand of management. Again, if you go back to that first time private equity journey, which is the case for many, many people, especially the lower mid-market and the venture capital end of the market, it's often the first time that management have worked with an investor before. The game's changed. You need somebody who's been there and done it before, got the grey hair and the experience to hold your hand through that journey. And that in itself is a very important role that a chair can bring to the table.
And it works from works from a leader's perspective as well, because it allows you to communicate to the investors in a different way. You can lay breadcrumb trails of information, positive or negative, or new ideas, new strategic. They play a really important role in information going up and down that chain.
Yeah, and the right chairman needs to be a partner to the chief exec. They need to be joined at the hip. And I suppose the right chair will obviously have the ear and be a voice to the investor as well, but they act very much as that bridge between the management team and the investor.
And similar to the sort of changing business dynamics of technology, globalization, have you seen the role of the non-exec changing and the types of skills that are needed?
I have, definitely. I mean, I'd say gone are the days where the old boys network is used and utilised in hiring chairs and non-execs. It's become a much more verticalised approach, I would say, focusing in on the skill gaps that exist. So if it's an international go-to-market strategy, for example, we want to crack the US. Well, we could do with a chairman who's been there and done it several times before, someone who's learned from their mistakes, someone who's got relevant networks, relevant knowledge about that specific market, and that can add serious value.
We like to give lots of information and tools and tips out to our listeners as well. So in the similar vein of lessons learned for non-execs, are there common mistakes and lessons we can help the audience with? Definitely.
So I would say, again, quick and dirty hires at non-exec chair is something I see on a regular basis. Especially as these hires are made pre-deal, it's not necessarily seen as the priority that it should be. Private equity firms will have worked with chairs, non-execs before. They may have had successes with those people, and it's quick and easy to go, right, let's bring Joe Bloggs back in to help lead this business, without doing any real process or ensuring that individual is A, culturally relevant for the organisation and a fit with the chief exec and the wider team, and B, has the relevant, I guess, kind of sector and background experience that's required to create value. It can be seen as we need to tick the investment committee box and let's get someone in. So I would say, again, like any C-suite role, make sure you get it right. Sadly, I'm often brought in, 12, 18 months later when that trust and respect hasn't been established between the non-exec chair and the chief exec, and that's to make it right.
Yeah, and that has to go the other way as well. From a management's perspective, it can be daunting. It can feel almost the extreme feeling is there's a spy in the camp now as well. And I assume there's some advice for management we can disperse.
The Trojan horse. Yeah. I mean, I would use someone like me. Again, I would say that. Someone who's independent, who can run a process and give more options, relevant options where the management team, the chief exec, can see why they're being listed. And you're right, what they don't want is a spy in the camp or the perception of someone being forced upon them.
Mm-hmm. But I guess just like a full-time employee, a great non-exec can be really empowering and liberating for the business. The wrong one feels like a noose round the neck, dragging the business down as well. So just making that right decision at the right time with the right support is really important.
It is. It's all about running a proper, full process to ensure you get the cultural fit and the value creation drivers right with the appointment that you make.
Okay, so if there was one piece of advice we could give to private equity investors listening to this about structuring the right leadership team, any views on that?
Yeah, I would say hire the best people. Invest in superstars. Don't cut corners, don't cut costs. Aim as high as you can, obviously within the kind of relevant, appropriate kind of costings that you might have. Don't do things on the cheap. And make sure you partner with a proper search firm to make sure that you hone in and hire the very best people. And
similar from the management team's perspective, any advice and from that perspective?
Well, it's exactly the same advice, really. What I would say is it goes back to the pace of change point. Make those appointments when you can, and invest in a team. Stretch yourselves. I mean, the right hires. And C-suite hires will keep CEOs up at night. You've been there. I've seen the last 12 months you've been on a real hiring spree, which is great to see. Mm-hmm. But you're investing for the future, so go for it.
Yeah, and the right hire can be liberating. The wrong hire can be disastrous. The proportionate impact to the wrong hire. So I would concur in take time, plan, think about it. Make sure the business that you align with from a search perspective understands both from what the investor needs and what the management need. And I think if that relationship's right, it can be really powerful. One that's led too much by PE or too much by management is just going to be doomed to failure.
Exactly. And you know what? I mean, obviously my role is to run really thorough processes to find the very best people, great shortlist, the right hire. The real measure of success, though, is that 3, 4, 5 years down the line, when the exit happens, what have they achieved?
Yep.
Did we get the brief right? And if they have, then it's mission accomplished.
So we've reached the part of the podcast now where we like to quickfire questions. So just relax. Whatever the first thing that comes into your mind is usually the right answer. Bit of a blend, bit of a mixture, so don't worry about these. So, favourite country to do business in?
I'd say US.
Excellent. Biggest mistake PE firms make when hiring the leadership team?
Making hires too quickly and not investing in people in the way that they should do.
One leadership trait that signals success?
I'd say the key word is commercial. Commercial, not just from a sales perspective, but also from a numbers and an operations point of view.
And this is a tough one. If you had to give a quickfire motivational speech to inspire the leaders to take this challenge on, what would it be?
I would say build the best possible team you can and shoot for the stars.
Excellent. Okay, so if we summarise the conversation today, and correct me at any point that this is wrong, we focused a lot on moving from privately owned business to your first time private equity, and that has emotional turmoil, it has new pressures, it has but great opportunities and excitement. And your advice has been make sure there's great open dialogue between management and the investors. Make sure you carefully think about the people you need to hire and then find the right partner to sort of navigate you through this great sort of talent network we have in the UK to put the right people in the right seats, and then you can shoot for the stars.
You've nailed it.
Absolutely fantastic. Well, it was lovely having you on today. I'm sure there's lots of useful advice and experience. It is a tough time for business at the moment, and I guess if there's anybody out there who's thinking about sort of building the right leadership team at the moment, where to find you, any useful tips, feel free to plug your business shamelessly.
Well, absolutely. I think the earlier we can have these conversations, the better. Even if you think you're 6-12 months away from being ready to press the button, again, we talk about the time it takes to find the right person, and also think strategically ahead. I'm always keen to talk to anyone anytime, So obviously check me out on LinkedIn and look at the website www.augmentequity.com, and I'm happy to talk to anyone that wants to find out more about what we do.
Okay. So finally, Angus, thank you so much. Lots of useful conversation and information, whether you're on the investor side of this challenge and opportunity or management side. Hopefully that was useful. And thank you so much for tuning in to this episode. And until next time, keep pushing beyond borders.